Good morning, everyone. January the 29th, 2016, the last trading day of the month. And for the last week, there's been nothing but calls bought, 129s, 130s, mostly 130s, and we're within reach of that number today. So, going to get their expectations met. The Bank of Japan took their interest rates into negative territory. The Japanese yen is down. The hope for this move is increased exports. So the currency wars continue, and these countries devalue lockstep with China to protect market share. It's kind of like OPEC. Defending market share no matter what. If you're having trouble with your sound, your audio, if anybody else is having trouble with the sound, with their audio, it's usually an ISP problem. Re-enter the room. Is anybody besides Karen having problem with me breaking up or not being able to hear me, my transmission? Karen, re-enter the room. So, we're in that situation where the Bank of Japan, and I mean, how in the hell can trade take position trades in currencies anymore? I mean, you can get your head handed to you, and several $1,000s per position were lost last night in those that were long the yen or playing the spread game. So. The dynamic we face is that the market will move in the overnight session to take into account this unexpected news till it gets to a level that just screams to be sold or be bought, and that's where it stops. So we're at a point where we have to take the market higher early in the session. And I like the long side of the market first. Hopefully we were going to get in at the 9 to 13 level. It may take 17s to get in now if the stock market sells. So that's where we are. The easiest trade to see is sell failure to take out 20, 24. There are chart highs at 20. That's why we had the high of 20 and a half. Chart high at 21, a rotational high at 21 and a half, 22, then 24, then it jumps up to 28 and a half. So we got resistance. So selling failure to take out 20, 24. Next area would be like to sell against 130, a very round number, 31, so we'll go 27 to 31. Give it a little room to operate. On the sell side, and then our backup buy 1 to 5. So we may be moving our buys up for 30 seconds. Now, we have a lot of news this morning, and the GDP, a lot of people are saying was negative in the fourth. It's called up 9/10. Could come in lower than forecast. Deflator. Plus 9/10. Stagflation we've been talking about for a couple of years. The best that we can expect under our current scenario, and we've got it. If you go read the Chapman report on inflation, very few. It's 8% to as high as about 13%, depending on the area that you live in. Trade balance. This one's kind of interesting. Minus 60 billion. That's a huge jump. Normally it's in the 45 area. So I don't know what they're looking at. Christmas purchases. That would be a little late for Christmas purchases. Employment cost index plus 0.6. Chicago PMI. Lots of news this morning. 45.5, showing that what is taken to be the automobile sector is in contraction. Consumer sentiment 93, and Baker Hughes reg count, don't know what the last week was at 887. So GDP is number one. Chicago PMI, consumer sentiment would be number 2. The consumer sentiment probably getting a little bit more. Can you believe how fast the news and everything else is accelerating? I mean, you know, chaos is what we're really involved in. And sure makes day trading a hell of a lot more attractive than position trades. I mean, except for owning treasuries. In this type of situation, being long treasuries makes it easier to sleep at night. Okay, just looking at the market structurally, we haven't spent a lot of time above 160. So when we look at volume numbers, 6124 is a low volume number. Next low volume number is 29. Next low volume number is 6204. So selling failure to take out this 2428 area. And then we're going to jump it up to 3 to 7 for sell 2. And again, 80% of the time the high or low is set in the Globex session. And the reason for that is that the market just gets to a price level where people cannot not sell it or buy it. And that can cap rallies. Now there's getting shorts on the opening should give us a little rotation up to retest the highs, but being able to sustain this move and turn 161.20 to 24 from resistance into support is going to be the key. So we have to be careful that we do take out 24 and that changes from resistance into support. On the buy side, taking a look at this, the 5 to 9 area structurally is where you want to get in. May take 13s. And then we'll make it, breakout came from 29, so 01 to 29 will be buy 2. The Bank of Japan's move, it does not suggest economic strength. It's a move like OPEC does to protect market share. And we're going to raise tariffs on so-and-so's products. Well, they're going to raise tariffs on you. That everybody, we're so intertwined. What is. And what really determines economic strength is productivity. And that's where the fight or the battle is right now. And central government policy, industrial policy, and tax policy do not favor increases in productivity. Favors the other way, protecting what you have. Crony capitalism, buttoning down the hatches, doing what you have to do to keep your doors open. Looking at gold. Again, I think gold's you're gonna have a hard time breaking gold, and we had the 10 to 12 as our buy area, then 5s to 7. 10s held up pretty well, so I don't see any reason to change that. Maybe 9s to 11s to get down to 10 to 12 puts us right inside of here, so buy 1. And then 5 to 7. And again, given the chaos that's going on around the globe, if you have gold or silver, you probably don't have it for trading purposes. You probably have it for to protect your backside. 19 to 21, sell 1. Leaning against 20. 24, 26, sell 2. Okay, the yen, euro, if you're long the euro and short the yen, you look really smart. And what's been interesting is that nobody's really you've been short the euro to the yen, and because Europe's express policy was to drive the euro lower. So Japan's kind of been sitting there in the 84 area, up and down a little bit, and we've had the big moves in the euro. So for those that were long the euro and short the yen, look halfway smart. Okay, we're still in a trading range. We talked about it yesterday. The 109.50 to 110 even has been the sell zone, and the 107, well 108, 108.50 has been the recent buy zone, capped or floor underneath at 108. So 108 minus 110 plus is the range that we face, and that's where we are right now. So selling 950s, sell one. Selling 975s, sell two. On the buy side, buying 109 even, buy one. And then 875, buy two. And because of the yen and the unwinding of positions, etc., we'll probably see the euro hold in this range for a bit. Don't think any selling starts until next week in the euro. Okay, crude oil. Interesting play. I mean, if you look at the dynamics, the world's troublemakers, the people that stir up trouble, people are trying to impose their will or ideas on others out of the Middle East, out of Russia, Venezuela, Ecuador, corruption in Brazil. They all need the price of oil higher, including Saudi Arabia. Now, Saudi Arabia, Qatar, Kuwait can live a long time, or longer than the others can. They actually built up some reserves or stores, but in the backwater of the news, the backwash, we find out that Saudi Arabia is spending money, right and left money that they don't have, and they're quickly eating through their reserves to the tune of about 100 billion per year, and that gives them, a 3 to 5 year survival window if oil prices stay at these levels. So, don't know what the actual number is. So there's real pressure out there for them to rethink their current position. The problem facing them is that if you drill vertically, you really, really have to keep the production going in oil wells. You can lose an oil well and have to re-drill it. Horizontally, you can shut them down and turn them on. And the costs in the oil patch have gotten a lot lower. Lease costs, service costs, production support costs. So we have all this quick supply right there in the United States, or other people that have perfected horizontal drilling. So if their objective was to kill the horizontal drilling industry, they're going to change the ownership of a lot of those companies, but the reserves are still there, and it's going to be hard to take it out. So the London high was 34. Last rotate up in X period was 74, so 75 to 34, sell one. And then 25 to 50, sell two. On the buy side, stops below 33, 32.75, 33 buy one. And then 32.50, 32 and a quarter buy two. So basically a 32.50 minus 34.50 plus market is what I see going into it today. Now, what's the E-mini going to do? We have Treasuries and the E-mini up, so we have this battle at 1900 that still hasn't been resolved. So we got a seller definitely above 1905, and the last couple of days you can say a seller above 1903. The market will not, I mean, it's just too high to be bought when we get at 1903. Japanese move without everybody was thinking quantitative easing, not negative interest rates. So the Bank of Japan took a move that others didn't expect. Bernanke came out and said, well, we could have negative interest rates in the United States too. So central banks are back out there. Interest rates aren't going higher materially. And the Fed, nobody expects the Fed to raise interest rates anytime soon. So we have borrow cheap, put the money someplace to make money, and that spread that money's gone into stocks here since 2009. So we've got resistance at 1900. That is resistance. So we're going to sell 99s to 04s, so on. And then new highs. We've got this high volume area 15 to 17. We're going to sell 9s to 14s, basically leaning against this area here. The trade at 14 is better. The market does rally than the trade at 9, obviously, structurally. On the buy side, we've got volume really in this 88 to 90 area. We're there right now. We've got a low volume number at 81. So we're going to make 81, 86 buy 1. And 71, 76 buy 2. Quick review of the news. GDP could come in lower than forecast. Will be revised lower in any event. +9. Deflator. +9/10. Trade balance -60. I don't understand where the -60 comes from. That's a huge jump from last month. We will see. Employment cost index +0.6. That's hard to believe. That could come in lower. Given the state of our labor market, the real state of it. Chicago PMI. If automobile industry is any indicator, could come in higher, but 45.5. Everybody says the strength in the automobile industry domestically is stuffing the pipeline. Consumer sentiment, they're not selling that many cars. 93, and then Baker Hughes rig count. Last week was 887. Take a bit to get everything up and posted. Going to get busy on that. I will see you as soon as possible.